So welcome once again. So I think this might be probably one of the last weekly call for our this macro call because we are heading into holiday season. Next week we are planning to do. So just wanted to update people. So I'm heading out for some time. So next week will be the last week, and there are a lot of people who wanted to meet up again. So we are going to do a in-person event like we did last month. This will be somewhere in Sunnyvale Bay, South Bay area. So we can all come in, talk about the year what happened this year. How I think we have been still seeing another great year. We are heading towards end of December. We're on a high, and what to see, what to expect as we end another great year for S&P 500 and so on. So we will wrap up there. But again, coming back to today's call, I think our goal is to look back at in the recent times, especially in the context of markets going back to very close to all-time highs again, I would say, from the SPX perspective. And we are seeing a lot of anticipation for next week when we are going to see Fed rate cut again on the table. The probabilities are rising again to almost certainty. And most importantly, as we discussed last time we talked, there was this whole liquidity issues going on. They seem to be resolved or not. Let's watch some of these parameters and let's start talking about that. And again, a reminder: if you are going to have any questions, or you can put it in the chat, or you can unmute yourself. Yeah, if you don't declare your name, it will not be recorded. So let me just share the screen so that we can look at the markets. So as I said, it was almost the same V-shaped recovery. We are getting, I think people are very familiar with this. This is exactly what happens in the market whenever there is any kind of a drop. This has been the kind of characteristic of many years. We have been talking about this. I know there was a lot of concerns when we last talked. I think on 21st November, that was probably the big expiry day. We had shared that in our WhatsApp macro channel as well, that it was one of the biggest expiry in terms of volume, in terms of numbers. And I think just a couple of days before that, the VIX itself, which is you can trade VIX futures and options, that also expired. So it was one of the big expiry for multiple reasons. One is that the whole shutdown was being debated in that month from options perspective. And in that week, we had NVIDIA earning. So we did talk all of these things, and the volatility was very high. And as we saw, after that decompression, after the liquidations or whatever triggered that volatility, we have been back, and we have been consistently moving up. Especially immediately after that week, we saw some big moves up, which was also helped by some liquidity release and so on. So overall, we are back. Where are we in terms of chart? Means we are pretty much, as we discussed before, at all-time highs or near all-time highs. What's the difference? I think the difference here is that this has not been a rally which is where we have the tech stocks making all-time high again. Like there are a lot of softer areas in the market. We are seeing NVIDIA still below its all-time highs. Microsoft has actually corrected significantly. There are a lot of, I think, tech stocks which are struggling. So, but on the other hand, yes, Nasdaq has broken out from its downtrend. It also had a sort of V-shaped recovery. The V is not finished yet, so it has some way to go. So I would call this as a more of a hopeful situation because we are hitting on the SPX, we are hitting new highs or close to new highs, even though the tech has not recovered fully. So that's where we are, I would say. So it's kind of optimistic scenario. Market has been going up. We recovered most of the losses, and we are yet to recover on tech stocks. And as I said, right, we were talking about volatility, so it's matching the same thing, right? As the VIX spiked, and right now, interestingly, VIX is way down to the levels where we were in September, and when the market was all happy and so on. So this is, as I say, we are part of the bull market. We have been talking about this. Short-term issues do come up. We had a lot of concerns around shutdown. We did talk about how there was a lot of stress in the SOFR. So this is the daily overnight finance rates. It was stressed out. In fact, you may have seen similar things if you're tracking this kind of a data in late last month, which is a usual thing. So I usually ignore the data which is towards the end of the month. So there was again some rise in these rates because of the funding needs of the banks. But we are more or less in 3.92 zone. And remember, if the rate cuts are further, which everybody is expecting, the Fed rate decision is now at 94% probability as per Polymarket. And as we always know, right, most of the times the market has been correct. Powell has not here really surprised based on whatever the futures and generally the markets are suggesting. So this will further create a situation of where we can have more and more relaxation in the rates and liquidity. So in general, what's happening here? So I think the bigger issue in the market is what is happening with Bitcoin. We are going to talk a little bit about what's going on in crypto, but because we have been looking at Bitcoin as one of the allocation factor. So if you see, while SPX has done the V-shaped recovery, while we have seen the maybe even Nasdaq almost close to a V-shaped recovery, the stress area still remains in the crypto world. So Bitcoin is still from a technical perspective, it has not broken any of the. In fact, it has become even steeper in terms of the downtrend. Even though I would say around the same time, you will see that because the liquidity situation helped, it has not fallen below the area. So it's basically consolidating and the recovery is much weaker in the crypto domain. So I think this is one area which we are watching very carefully. So we are going to talk a little bit later of what's really going on and what's really bugging it. But I want to delay the discussion because that needs a little more double clicking on what's going on. But what are the other asset classes? Gold has again broken out around the same time it bottomed out from the consolidation pattern. We are seeing that the triangle is broken. And while it's also not going very aggressively like last time, what is happening is this time we are seeing silver doing much better. So this is more of a rotation, I would call it, where silver used to always go higher, as we discussed previously in later cycles of bull run. And that's what we are seeing. But overall, as the precious metals are also showing very similar signs of recovery from that liquidity crunch too, where we are seeing improvements happening in the prices. So all these things are pointing to a pretty decent, I would say, all asset class recovery except for crypto. And now let's go back into the rates. Now this is where a little bit of concern is rising because the yields are again going up, which is the longer term yields. And this is probably one of the, I would say today was one of the biggest increase. And in general, as I have been talking about these slopes, if you are joining these calls, I've been talking about this long-term slopes of 10-year yield. So we were in a very steep fall since July because of the expectations of lower rates ahead and so on. Now we are probably testing the secondary slope, which has been, still a pretty steep slope. And I would say we have a long way to go before we get concerned. So I'm going to expect this to, first of all, let's see if it breaks out of 4.2 area, which is where we will be, breaking out of this trend. And from a long-term averages perspective, also, we have a lot of resistance here. So in general, I would say I'm not concerned till we start threatening either the 200-day moving average, which is more of a, I would say, long-term reversal, and ultimately the 4.3% zone. So at this moment, yes, some people in the market are getting concerned, probably because the rate cuts are now again expected, and there are some concerns around whether it will trigger inflation and so on again. But I think what is the clear tell right now in the market is that the fear factor is gone. We are seeing the VIX being very low, and SPX is slowly moving up. So that's a summary. I would say way better than what we discussed 2 weeks back. Everything is looking pretty much waiting for next news, waiting for the rate cuts, waiting for this year to end on a good note. I don't see anything major here which should surprise us, unless of course Fed decides to surprise us, which is, as I mentioned, is very rare. On the other hand, I would say the gold, silver, and Bitcoin are very closely watched in the end of the year. Silver is driving the rally right now. Gold is in a good spot, but we will take a few questions before I jump into the Bitcoin and the discussion around what we are seeing, what is bugging crypto. So let's first focus on the tech stocks and the questions around it, and then we can talk about what is happening with crypto. So I will give it a moment here for people to discuss. And in the meantime, I think while you are thinking, or if you want to add your questions here in the chat, one thing which I keep getting, I think, from direct messages perspective from people is this whole discussion about, I think a lot of people are paying attention to Michael Burry or all these short sellers. I think overall, we have been talking about it. I have been responding in many various threads. There's nothing which is showing us the data backing support from, there is no data supporting any of these claims where people are, these are sensational short sellers. They have been right once or twice in their life. And I have talked enough about it. So I just want to keep repeating that if you look at the charts, if you look at the overall market direction, this was just maybe a little deeper correction than usual. We have seen this many times. We have been talking about the factors, which was the liquidity and the whole bank reserve concerns, which were bugging the market. If you see that played out as we had talked about. So if you just forget the noise and if you look at the longer term picture, we are basically in the same trend. Quarter over quarter, we are expecting better and better earnings. We are expecting markets to react only on the earnings. We see some kind of a move, and then we are basically grinding down. After that, the speculators are wondering what to do, and this whole narrative starts in the middle. By the way, we have one other critical part of the whole AI story before we take more questions is the critical part of the story, which is going to unravel, is one more like the kind of leader of the doom and gloom right now is Oracle, and they are going to report earnings next week. And as you may know, that a lot of people are using Oracle as the proxy for the first to fall. Their credit spreads, credit default spreads were rising. The stock has been hammered since last earnings. So it will be, I think we might get some kind of an update from them. Ultimately, they have to respond because the whole news was very bullish when the last earning came out. And since then, analysts just decided to totally um, kind of kill the stock and the bonds and so on. And as I keep saying, it's one of the very mature companies. It's not like something which just popped up yesterday. So you cannot just go about expecting Oracle not to respond and not to be responsible with the. Then they are aware that whole market is watching. So very interesting earning coming next week. I would say let's watch what Oracle says, especially in the AI domain, and we can discuss further. So let me quickly take a question here in the chat. It says, is VOO a no-brainer to put in retirement money? Yeah, I think this is the very typical, I would say, long-term investment thesis is you cannot go wrong with something like S&P 500 investment. We do talk about that. But again, as we say, right, when this that is more like where you add. Like if if you're doing a dollar cost averaging over a very long period, definitely no-brainer. But if you are putting a big chunk in one day, means you can go wrong because of the timing. Because as we know, right, means we have seen 2022, we have seen 2020, we have seen so many times when we have seen big enough corrections, and sometimes it takes multiple years to recover. So if you want to be passive, usually it is recommended to dollar cost average and not pick up a big chunk. But yes, that is one way of passive investment. Means of course we are pretty much active investors and we look for, and most of the community which we deal with here, I'm sure a lot of people are active investors. So we look to beat S&P 500. But I think overall, if you want to be passive and if you don't want to be stressed out and want to take it easy, that's a great way of investing. All right. So I think I'm waiting for a few more questions on the general on the tech stocks and the market before we jump into the crypto story, because that's where I think a lot of people are interested. And we can walk through that of what we are seeing in the market. Actually, there was a couple of other things I wanted to share before we jump into that, because if I remember, there was this one discussion we had in our weekly thread, and market was worried is the Japanese bond yields and the yen carry trade. There was a lot of panic, I would say, last week because of continuous attention to what is happening in the Japanese market. And as you know, a lot of people are like, Japanese money is driving a lot of economy in the world because they issue a lot of debt and they have almost 0% rates for a very long time, which created this whole carry trade where people were investing into US markets and so on, borrowing from Japan and so on. And so I think the worry was whether the yen will, start appreciating too fast, even though it's appreciating, but it's very orderly. So I think market is absorbing it, this news very well, even though they have also indicated now the Japanese Central Bank has already talked about raising rates, and the news has been pretty much absorbed very well. So this is one thing which has gone away as a concern, I would say. So that is a good news from certain perspective, and we are seeing that one more thing, which one more risk factor, which goes away. But of course, there's something to be watched closely as we see that one of the biggest financier of the whole global markets is probably going to have higher cost of capital very soon. So this is something which people are still watching very carefully. Okay, let me take a very quick question in the chat. It says, how do you measure the overall risk in the stock market? Uh, I would say, yeah, I mean, the question is that whether the market is at a higher risk now versus last month. It's very difficult to say whether you are at a higher risk or a lower risk. Let's put it this way, that yes, when the market has been correcting, uh, even though you don't know where the bottom is, it's always good to buy on a dip because you will always get a better deal if it recovers. On the other hand, I'm sure, means even like we do our managed accounts and so on, and it's very common. Means I don't blame anybody, but people tend to stop investing, or like people who used to do very regular additions, they stop adding money when the market drops because of uncertainty. So while the perceived risk by the market was higher last month, because the market was very choppy, and in fact it was correcting, and it was, if you see the size of the candle, that means that even the intraday moves were very big. As you see the candles becoming shorter and shorter, you see that market is less volatile. So from that perspective, yes, the perceived risk is lower, but at any given time, if your time, the risks are always time dependent, I would say. If you are like, of course, and as we just discussed right before, earlier in the call, VIX is also pointing to, market is seeing lower risk. So when market is seeing lower risk, definitely I would not call it as a low risk market, because if you are not prepared for it and if market is not perceiving it, there's a higher chance of a black swan. So from that perspective, yes, the risk might be higher of some negative news impacting the because market is getting comfortable. So the drop can be bigger if some black swan happens, but how many times does that happen? On an average, I would say we are in a better shape on the chart. We are seeing that market is peaceful. We have seen the V-shaped recovery. We have seen the VIX go down. So overall, everybody is right now just waiting for the expected, as we call it. There is no unexpected because the Fed is expected to cut the rates and so on. So everything is now kind of calmed down. So perceived risk is low, while I think risk on every day is same, because how the market can react. If you're investing per trade, the risk is defined based on what is your trade, entry level, and what are the max loss and max profit, rather than trying to predict where the market is going. So, so let me put it in short, means that there's no easy answer for that. But what I can say is that last month, yes, because we were correcting, the probability of going higher at some point was, in your favor, because you're buying on a dip versus buying at high. But on the other hand, as we have seen, that every time we go and test a new old high, we usually end up making new highs because of this whole cycle we talk it. We always believe in money supply increasing. We always believe in net markets go up in long term. So from that perspective, the perceived risk has reduced, and we are in a much better shape to go and make new highs now than we were in last month, because the uncertainty was higher. So sorry if it was not the answer you were expecting, but it is mostly a very much, I would say it's a very subjective question to say whether we are in a lower risk. It's almost like trying to predict where the market is going to go next. I do see a question specific to Microsoft, and I think I try not to comment on specific stocks, but we did talk about the whole ecosystem play, right? We talked about how Gemini has impacted OpenAI trade, and how Microsoft has suffered since then. Even in our macro group, we talked about it earlier. So right now we are going through this whole market resetting around who will be the leader in AI world, and I think that is probably playing out when we look at Microsoft. And to be frank, Microsoft chart is not looking great. Even though it stopped at 200 moving average exactly, so that's a good sign. But if you look at Microsoft chart in general, it has made a double top, and it is looking pretty depressing right now unless it falls back above 495, which was its previous support. So if you see, it broke down this support here. So if you're talking about this, we can have a quick look again. My goal here is not to recommend or any stock in this call. We try to avoid that. But if because Microsoft is one of the big bellwether stock and it's also very high weightage in the SPX, we can look at this as a yes, there is a great support here, 200 moving average, but it failed to go above C. So as we always say that because in the context of how technical analysis work, I had drawn this line long time back and in terms of the support. And if you see when it broke this support and it tried to retest it, it became the resistance. And right now we are basically consolidating in this range. So till it breaks out of this range or till it breaks down below 200 moving average, we are basically indecisive on Microsoft. But in general, what is happening is we have seen how great Google has done in last few weeks or months, and that is all because market is shifting from the OpenAI being the winner and driving everything to now they are questioning whether why would Google not be able to survive and benefit from their distribution from their moat, and they are basically Gemini 3 has really won over a lot of people. There are some great reviews. They are basically caught up, and not only Google is now gaining because of that, but also Google is seen as top-down stack, which is they have the hardware, they have this distribution in terms of users, and so on. So that's where I would say Microsoft is suffering, and most of the ecosystem around Microsoft is suffering, while Google and so on are doing better. But it's a matter of rotation. I would say it's always like people found Google more undervalued, and Microsoft probably being identified as the winner earlier, and now it's kind of balanced out. So from here on, it doesn't mean that after this readjustments already happened, when we make new highs again, um, is it necessary that Microsoft will keep suffering? Maybe not, because now some people might think, or when you are talking about rotation of money, you may say that now if we have to make new highs, ultimately Microsoft has to make new high because it's the one which is still 15% below its high or something like that. So, and same thing is probably true for Nvidia. Of like, if you see, because of the whole Google story, even Nvidia got battered, and we saw stocks like Avago and others doing better. So this is all, I would say, a rotational play. If you believe in the AI story, all of them have a good market. Nobody is going to suffer if AI continues to work out the way it is working. So market do rotate because some stocks run up in optimism much earlier than others. So that's what happened here, and I would say it's a matter of time. If we are going to new highs, then all of these stocks have to catch up at some stage. So that's my view. And same thing, like if you see Meta suffered very heavily. And if you remember, we were talking about Apple being behind in for a very long time, and then suddenly Apple caught up. And now I think is it time for people to rotate from Apple into stocks like Meta and so on. We already saw Amazon trying to recover. It did not work out as much, I would say. But in general, there are a lot of stocks, a lot of Mag 7s, which are still nowhere close to all-time high, while SPX is making new highs. And what is going on, by the way? Like this is the first time, and we are seeing um, the small caps, which are actually making all-time highs. This has been going on since the rate cuts, and even though the correction did impact these equally, but now we are SPX is all-time high and IWM is almost all-time high. That tells you that there's a lot of rebalancing happening. There's a lot of people who are looking for value down the chain, and it makes sense because now you're talking about the whole QT is ending. We are talking about how all these smaller the debt-based stocks or the stocks which are not as solid in terms of cash flow generation as the Mag 7. They were living through a very, very tight condition. So it's expected that these stocks will do well. But on the other hand, as you could see during the correction when the liquidity was low, they also have higher chance of going down. So it's not that they are safe either. So it's a lot of liquidity play, I would say, rather than valuation play here. If markets have to make new highs, then probably everything has to go up now that we are looking at easy money policies and so on, which everybody's expecting. All right, so I think let me quickly jump to the Bitcoin world, and because this is where I wanted to spend some time today, because a lot of people have been sending messages, and we have been talking about this because this is the only asset class which has not recovered from the October-November drop, and it is kind of struggling. So there are two things here, right? Means one is, of course, Bitcoin is going through correction. It's not. It's a very high volatile assets. We have seen Bitcoin. Go a little wider. So if you see, Bitcoin is not new to big corrections. We did see it going down earlier this year when the rest of the markets were doing very good. I don't think we had any kind of bear markets at that time when we corrected from all the way 108,000 to 74,000. Then again, this time, initially we got triggered. This whole drop started with the rest of the markets, and what is going on right now is we did discuss during this period what was driving this rally. So first of all, last year and early this year, the big chunk was the MicroStrategy of the world buying a lot of Bitcoin and consuming almost all the supply which was available. And as we hit new all-time highs, all the old time owners, they were like, the holders from 10 years, 12 years, there were some new wallets getting activated. It happens every cycle. It happens every cycle that we have a lot of profit taking. Now, what different happened in October onwards is that, as we know, that there were a few liquidations, there were some big market makers which got liquidated, and there was this whole conspiracy theory started around the digital assets that they are not going to be able to afford. They are they will not be able to pay their debt and so on. And we have talked multiple times. If you are part of our All Access, we've also talked about most of these things are not based on facts. These are just fear creation and so on. But let's talk about very big factor here, which was at play in last few weeks and months. So MicroStrategy was, I think, the leader in accumulating Bitcoin, and they were totally battered by some of these big short sellers. And we believe that right now what is going on is they're trying this, all the like BlackRock of the world and so on. They started worrying about why means the MicroStrategy was taking so much of their inflows. If you talk about IBIT inflows and so on, all the attention was going to the digital asset treasury companies. So if you look at it, the IBIT inflows, this is typically the tracker here. Now it has been, kind of stagnating at some point, and of course they are losing. If you talk about MicroStrategy, absorbing tens of billions of dollars, whether it is in convertible debt, whether it's in preferred stock, even as recent as I think last month they raised from Europe another 700 million dollars from Europe markets in preferred stock. So these kind of things big banks don't like, because ultimately this is their bread and butter. They were hoping to absorb all the Bitcoin related inflows. So what they are trying to do here is they started this whole negative campaigns, and they started shorting MicroStrategy. In fact, there was this whole report which came out that even JP Morgan Chase was very, very short on MicroStrategy. Jim Chanos was short and so on. So they created this kind of a panic, and many of the digital asset treasury, there were like 174 digital asset treasury companies which started in last 6 months. And as we can expect, all these big banks, they had to fight back. So they fought back, and they tried to make sure the leader gets killed. And in that process, the MicroStrategy right now is quoting at a discount. So if you are looking at some of the, whether you buy Bitcoin ETF or MicroStrategy, you can own MicroStrategy, which will give you a cheaper Bitcoin while they are still generating yield on Bitcoin. So yes, this has been kind of a dampener for crypto market. But what happened is the people lost the confidence, because this is where most of the money was going in. And if you see now, all the reports, if you look at all the big banks are now changing their tune. They're talking about going back to Bitcoin, going back to 250K and so on. So I would say what we are reading is this MicroStrategy has stabilized. Now they have created this dollar reserve and so on. So they have already pacified the markets that they have no issues paying dividends. They have no issues paying their debt and so on. So from that perspective, market is kind of calm. It is kind of consolidating now. But on the other hand, in this process, the crypto world got liquidated. There were a lot of people in the middle who got burnt. In fact, even the inflows. Sorry for the all the ads in this site. Even they are suffering, but they are not suffering as much because for them, they are willing to take this short-term dip in, in terms of outflows for the longer term gains because they cannot allow MicroStrategy of the world to take all the inflows from Bitcoin. Fundamentally, has anything changed? Means I still see them giving high targets. I still see a lot of new allocations. We did talk about new buyers coming in every day, whether it is I mean, the news around the Harvard, whether it's news around all these new players coming in, different countries buying. In fact, we are seeing more and more sovereign nations now considering buying Bitcoin. So nothing has changed, but it's a matter of yes, Bitcoin is prone to big corrections. Yes, market is easy to manipulate because there are a lot of market makers. There are a lot of 10x, 20x leverage players in the middle, which have been getting liquidated. But on the other hand, we believe that this correction had more to do with the fight between the big banks and the MicroStrategy of the world. And MicroStrategy will survive for sure because, as we have been talking about, they are so the leader in this space. They have been, making sure that everything is they are able to pay their dividends and so on. And I think the bigger issue here is that the 174 other copycats of MicroStrategy, they never quoted above 1x MNAV. Many of them launched in last 6 months and they have been struggling. And I think that's what is has created. I think that is the success of the big banks. They could not let the narrative of Bitcoin escape. Like they cannot have these treasury companies take all the inflows. And I think that was the last 6 months. It was writing on the wall that everybody was launching this treasury company, and they managed to almost make everybody unprofitable. Anybody who raised money into the distressed treasury company, they have lost because they are all quoting at less than 1 MNAV. And I think that is what was happening in last few months. Now, where do we go from here? So definitely, technically, it has become weaker. A lot of people were, so as you know, Bitcoin has this whole 4-year cycle and so on. And a lot of people in crypto world lost confidence in the last few months. On the other hand, we are seeing continuous inflows coming in from institutions. We are still seeing a lot of people who are still buying in terms of when we talk about the long-term buyers, when you look at whether it is the big funds, sovereign funds, whether it is the like professional investors and so on. Even MicroStrategy stock has been acquired by some big institutions in last 1 month or so, looking at the premium discounts. So I think it's a matter of whether ultimately the big banks, they have to go back, and they are already publishing a report. They are pumping out a lot of reports now to go back to this usual story of how Bitcoin is the great diversifier. And let's talk about, as an investor, what you do, right? Because we have talked about it multiple times. When you look into everything is so correlated, whether it's stocks, whether it is bonds, and so on. On the other hand, gold and Bitcoin, these have shown that in a very short term, they may be correlated, but in medium to long term, they have been the only way you can diversify yourself. Even in fact, all the tech stocks, means you cannot diversify within stocks. We cannot go and even though there is a rotation from time to time, but if you look at 1 year, 2 year, 3 year time frame, you will see that almost everything is going in lockstep. So this is where I think you have to understand, and you have to assume that yes, Bitcoin will go through these phases. It is prone to bigger corrections, but I think the story playing out right now is there was an excess of debts, there was an excess of digital asset treasury companies, and banks wanted to fight them, and that's what they did. And from our perspective, where we are seeing it is most of that is over now. Now it's a matter of whether the confidence comes back into crypto markets and how the liquidity comes up. At this moment, we did see liquidity improve. We are still struggling to break out on the technical factors, but I don't think it fundamentally changes that you should not have allocation into crypto or Bitcoin. It does make sense. It does make sense to diversify yourself because the way these assets have done better in a long part of, I would say, last year, this year, and so on. There will be times when they underperform, and that's actually one of the benefits of diversification. So that's how we think at Proflex, and this is what we are recommending people. So there will be times when it will not perform as per the S&P 500. On the other hand, it's a solid asset class. It has proven its worth. multiple times. And even now, I think nothing has changed fundamentally. It was a cleansing, and which is what is going on right now. So now I see a question here. So let me take a few questions here quickly. Feel free to put it in the chat. So the question here is, how do I know that Bitcoin at 90K is the right price? Means I think the right price question itself is a wrong question to ask, right? How do you know Nvidia is the right price at 180, or how do you know Google at the 320 is the right price? So nobody knows the right price. Means that's not how one should think about investments. It's about whether be you want to have allocation. You want to have allocation into a certain asset class. Are you able to take short-term risks of higher volatility, like in something like Bitcoin? By the way, as we have discussed a few times, if you see even the tech stocks with the nature of margin, the nature of how much I would say leverage play is built up, even the tech stocks. I don't think Bitcoin is more volatile anymore. In fact, we have talked about it multiple times that even Nvidia has gone from 140 to $80 to $210 within this year. By the way, these are the numbers I'm talking about. Um, I don't think Bitcoin has done as bad as something like Nvidia in terms of volatility. So I don't think, again, going back to your question, is whether it's a right price or a wrong price. I would say it's not about the price, it's about allocation. Overall, as what we believe in Proflex, and we have been talking about this, is if an asset class is solid and it has a long-term story, unless the story changes, money is always growing and the allocation keeps coming into those assets. And you need to have a proportional asset to the mega trends. Bitcoin is one of the mega trends. Gold is going through one of the biggest trends, even though it was kind of static in 10 years before that. But gold is going through currently a trend. And if you take really longer time, like 20, 30 years and 40 years, gold has done great. Yes, it was one of the pretty bad asset class to hold in 10 years leading up to, I would say, 2022 or something. I need to check exact dates, but there was a decade when gold didn't do anything. But I would say AI is a great mega trend, which is we are going through. So in general, I would say we have this whole um, allocation discussion rather than price discussion. We should have whether you want to be exposed to this, whether you want to build this in your portfolio. And price is more about your strategy. Means are you a short-term trader? Are you a long-term investor? Do you want to do dollar cost average, or do you want to buy low, sell high? Or there are a lot of strategies you can implement once you know your allocation. It's more about understanding these assets and defining whether they have the place in your portfolio rather than looking for the great price. And again, this is where I think most of the investors make a mistake of thinking of it as a trade. Because if you're doing a trade, you will probably be successful one time. Let's say I say, yes, 90K is a great price. And let's say you get to 110K, 120K, and you say, okay, means I got my 30%, I want to get out. What do you do then? Like, you are compelled to invest into something else, which may not be at great price. And as most of the many things in short term are sometimes correlated, what if everything is at a bad price? Are you willing to go sit out of the market in that case? And I think that's where mistakes happen if you're only looking at price the decision rather than allocation as decision. So I would recommend not to think of price, but think of allocation and then risk managing those allocation rather than like whether if you are interested in asset class, you should just go ahead, define what percentage of your portfolio that asset should be allocated, and then you risk manage. If you are seeing that short term it can go down, or you want to put hedges around it, or do you want to add on dips, or you want to sell on highs, you can always increase or decrease allocation. But it's not about finding the right price, because that will only give you one trade. It doesn't help you make money over a longer time using a portfolio approach. Then I have another question into, is it a good time to start allocation into gold and silver? I would say, I hope I answered this already with the perspective of Bitcoin. It's tough, and we are not here to go recommend that one asset is at a great price over other. I think it's again the very similar answer that if you feel that you should have allocation into different asset classes, you need to understand what purpose they are serving in your portfolio. As I think somebody asked earlier in this call that can I just invest into SPX or the ETF, WOO or something for a long time? So that is one way of saying that, yeah, I believe in tech, I believe in stock market. I believe in long-term story of US markets. So I just invest into ETFs. Same way, if you believe that gold, silver, even means what is your time horizon? Like it's very much possible what happened for a decade almost before, I would say, last couple of years or so, where gold actually went down and came back to the same level. In 10 years, it didn't do anything. Is it possible? Yes, it's very much possible. But what is really driving gold story right now? The gold story is being driven by de-dollarization. We are seeing that globalization, peak globalization is behind us. We are seeing that now we are going into multipolar world. We are seeing that China is buying a lot of gold, and that is what is happening. Is they don't want to rely on dollar reserves. They are probably going to go down the Russia path, where Russia totally rejected all the dollar reserves and they sold all the US treasuries, and their foreign reserves are only in gold now. If China is doing the same, which is pretty much obvious, you have another $500 billion worth left for them to sell off the US treasuries and continue buying gold. So that can be one story you can play. So I still believe till China is not done dumping all the US treasuries, we can expect gold to continue being strong. It's very obvious what they're doing right now. But is it a great price? I don't know, because China may wait for 10% correction and then buy, and probably they put a ceiling on saying that I will not buy if it is above 4,000. So if China suddenly disappears for 3 months or 6 months, and if they have a different time horizon, probably you cannot predict where the gold is going. So tough to say again, the timing or anything. If you are with Proflex, and we have been, like in our investor day 2 years ago, we have been talking about gold. We were very bullish at 2000. We are probably recommending an allocation at this stage, but we are not saying that it's a sure shot bet right now. It's very tough. But again, my goal here is not to recommend one stock over other. But basic idea here is you need to just understand and track the story. Means when you are doing active investments, when you are choosing these things, you need to know why you are doing it and what's the story. And so, as we always say, gold is a China story because they are going into de-dollarization. Bitcoin is a global money supply story, that it's the only limited kind of asset, limited supply asset. It's algorithmically scarce. So it is a money supply story, that as long as money supply keeps increasing and Bitcoin keeps getting more and more allocation, it keeps going up. The stock market is a tech story, where we say that we will always have US leading uh, technology, and being the leader in public markets, because your Googles of the world and Apple, Google, Meta of the world, or Nvidia of the world will keep leading the technology, and that's why US is a great place to invest, US stock market. And because you believe in US stock market, you invest in S&P 500. So these are all the stories you're allocating into, not into a price level. And then if your stories are good, if you are at the right allocation levels, in long run, you will always make money, because if your story is resonating with the rest of the world, and if there are no alternates in the world to invest into, as the money supply grows, it will get allocated to the same places where you are allocating. So that's how you should think about it, rather than thinking about whether it is the right time right now or some other time, because I don't think anybody can time the market. I don't think anybody can predict tomorrow what will happen. Or yes, you do all these analysis. We do a lot of technical analysis that increases your odds. So let me put it this way. So when you look at a good price versus bad price, it's more about your odds are in your favor when you see some kind of support level, some kind of, let's say, buying after correction. Means just by usual theory that if you're buying every week or every month, dollar cost averaging in, the theory says that in long run things go up, you always make money. So if you buy after a 10% correction or 20% correction, in theory you should do better. So buy on dip can be a strategy, dollar cost average can be a strategy to identify price, or you can be more sophisticated. You can do technical analysis, which again everybody does. Like we also do when we do allocation into managed portfolios, when we talk about alerts into overall access. So as a trader, everybody does that. So the question here is whether you are allocation is a different question versus right price. That's all I can say. And price matters based on what's your time horizon, what is your purpose, and it can be good or bad at this stage. But yeah, good questions all around. I think I can always talk about these things because I have a lot of um, thoughts around these. But feel free to update your question if I did not capture it properly and if you had some of the different ideas. But basic idea here is, in general, we have seen time and over time again that in a medium to long term, uh, S&P 500 is one basket, or tech stocks you can call them in the modern world, because S&P 500 is dominated by tech stocks. And then we have gold, and then we have Bitcoin, and so on. These are great diversifiers, and you need to define how much you want to allocate into. And in terms of why things keep going up and why we always believe in macro, or where the markets are heading, we always look at what is the money supply situation rather than what is the valuations, because liquidity drives the market price. And if you go back to 2 weeks ago when we had the last call and our sentiment was very negative, we had kept on repeating that liquidity is the problem, and it's nothing to do with AI being a bubble or valuations being too high. And we have been proven right, even though the bubble narrative is becoming bigger and bigger right now. If And again, it's a matter of media, news, and some of these short sellers getting too much attention right now. People like Michael Burry's of the world and Jim Channers of the world are just making too much noise, and in the lack of real news, you will see these stories getting repeated all over the place. But in reality, while the bubble noise is growing, the market have come back up again. So that shows you that valuations or fundamentals are not, they don't even matter, because the market was correcting because liquidity was not there in the market. Liquidity starting to come back. And by the way, liquidity has not even fully come back right now. We are still seeing the TGA has not yet gone down much. They are still keeping the dry powder. We are still seeing there are some, like if QT just ended last week, it's not even, we have not even seen a big, long enough time period when there is no more reduction in balance sheet and so on. So all these things are, there are a lot of factors at play. There is a lot of means we did discuss, and this is something which I want to discuss in the next week when we meet up in person. Um, the What the administration is doing, if we talk about the macro, we have not even seen the real impact of all the new things being put up, like the SLR relaxation, which was earlier this year when they started. Now they are doing the ESLR. There are some very new proposals being put up where they are saying that you don't even have to worry about treasuries as risky assets, because they're always backstopped and they are supposedly risk free. So now they are proposing that banks do not have to worry about any ratio, and they can just basically loan as much as they want. Or means of course I'm exaggerating. Somebody who can look into the technical papers in detail, they can correct me. But my basic idea here is the amount of effort being put into to relax the liquidity, amount of effort being put into creating a case for much lower rates in the next year, that is ahead of us right now, and we are sitting at all-time highs. So the positive case from a macro perspective is very, very strong. Now, yeah, we can all listen to the valuation stories and the stories about the scams of AI, which are all made up things by some analyst, which I cannot prove or disprove, because as I always keep saying, I would rather trust some of the biggest innovators of this world, of this country, rather than these short sellers. But I think it's all a matter of, what is really going on is we are heading into easing cycle. We are heading into lower interest rates. We are heading into probably expansion of bank reserves, which usually means more money supply, which usually means there will be money looking to get allocated. And we have not even talked about when the rates come down and when your CDs and when your MMF start paying less, what option the retail investor has but to invest into risk assets. So a lot of good things, I would say, which are promising. But as we all know, like it's everybody sees the same data. Probably market is already front running it. Probably market is already valuing that. So we will only know when in market plays out, and we have to be very. If you're active traders, you have to watch very carefully. If you are a 10-year horizon index traders, it doesn't matter to you. You can just sleep and stop looking. So that's how I see it. We believe in active trading. We do a lot of active management. So we are very tuned into this, and we always believe that story can change every week, and we don't get overboard with one way or other. But one thing is for sure that in medium to long term, it always pays to be in risk assets, and it always pays to invest rather than not invest. Because one thing is for sure that if you're not investing, your money is losing value. That is by definition, because inflation is real, and the actual inflation, not the headline inflation of 2 or 3%, but the real inflation, especially for top one percenters who actually probably have a real inflation of 10 to 12% on an average per year. So if you're an investor with excess money, it's always good to have investments rather than not having investments. Um, and then it's all about your strategy, whether you're a trader, whether you're long term, or whether how you allocate, as we discussed through this call. I would say that's up to you. So one or two last quick question. I think we are at the top of the hour. Um, I see. Okay, so very a lot of people are claiming silver to $800. I would say silver definitely has been a laggard in this precious metal rally. We have been big in allocator into silver. We have a lot of silver miners and so on in our all access. We have been recommending them for some time at Proflex. We don't give out price targets like that. We don't try to sensationalize it because I don't know what is special about $100. It's already done great. Means we were at, you know, 25 $30. Now we are at 55 $60. We have already doubled, more than doubled this year. So I think it can be 60 or it can be 100. Yes, silver has a lot going for it, but I don't think there is anything different which is I'm going to say to justify what they are saying. Is these people create sensational round numbers, like $100 is special because it's round number and it gets more eyeballs to them. YouTubers mostly, they need clicks, and they make money by how many people share the story. So I would not comment on specific price targets, but yes, precious metals have been doing great. Silver is a great investment for long term, but remember that silver had gone through means silver hit $50. I remember, if I remember correctly, some 15-20 years ago, and silver just broke out of $50 again after such a long time. So there are risks to every investment when you are buying at the after a huge run up. So always look at allocation. Don't FOMO into it. That's all I can recommend. Just because somebody said it's going to 100 doesn't mean that it cannot crash from 60 to $25 and then go back to 100 maybe 10 years later. Do you have the capability to, hold on to that? That's a question to ask. And how are you risk managing your allocation? That's something you have to ask yourself rather than just chasing a price target. But again, thanks everyone for joining. So next week, as I said, will be our last meetup on macro discussion. We are going to do review in person. We are meeting. We'll send more details very shortly. It is in South Bay, and our goal is to have a good discussions. Have like we tried this last month. It was great. It's just informal. Just show up and we grab a couple of beer and we just talk about markets. We will make it structural this time. We got a lot of feedback. We are going to create a very specific structure. We want to cover a lot more topics because it's a year end. Uh, we have gone through a very good bull market. Last 2 years have been great. This year was great again. If we stick around, of course, means there's a lot of time still in December. I would say, but we are going through one of the, I would say, all asset rally in last few years. It's done very good for most of the people. It will be a great to sit review what happened this year and what to expect from here. That's the goal, and looking forward to see as many of you as you can make it. And also one more quick announcement is that we are going to have our Investor Day in January coming up soon. We will share those details as well, where we are going to have a very thorough, as usual, presentations and discussions about mental models, how to plan for 2026, and so on. So all those things are in plans from our side. And one final thing is a lot of people means we have been very busy, so we were a little bit low touch in last few weeks because of Embark launch and many other things which are going on at Proflex. If you have questions, feel free to send over admins and to me or Amit or Parth and so on. We have all the people you are regularly in touch with on our WhatsApp group. So I'm sorry if I have not been able to respond because, as you know, and some of the people who are joining Embark already know that it's a pretty big effort we have put together to get Embark off, in last 1 month, and we are very excited about what we are doing for people because this is really solving big issues which people have with their RSUs, with their big investments, and so on. So reach out to us if you have any questions on that. But more and more details can be shared in our this touch points we are creating. We are creating these informal meetings. We are having another investor day next month. So looking forward to meet all of you. And if you are not able to join next week, I'm going to say have a great holiday season, and looking forward to talk to you guys on this forum here in next year. Thank you. Bye bye.